Hi guys, so in today's video I'm going to be talking about how Amazon have been getting away with more tax evasion recently and how it's actually legal. So let's get right into this one. Amazon has seen a fall of 50% of their UK tax paid last year, while recording a 54% increase in turnover for the same period. So their turnover has gone up by 50%, but their tax bill has gone down by 50%, which is strange. Taxes are paid obviously on turnover, so it doesn't matter how much their turnover goes up by. It doesn't matter how much their turnover goes up by, as long as their profit margins are the same. So they won't have to pay more tax, even if their revenue goes up by 50%. If their profit's the same, then they pay the amount of tax that they made on profit, not turnover. If I didn't confuse anyone by saying that, but so last year they paid 7 million compared to 15 million they paid 2 years ago. So they're paying less in tax because their profit's lower, however their revenue's gone up, which is strange and doesn't fully make sense. So Amazon UK services, they're the ones that deal with, people who buy products inside the UK. Sorry, they give each full-time employee gets £1,000 worth of shares. So on top of how much they would get paid, they would get a certain amount of shares as well. Staff, because of this, staff compensation goes up. Compensation is an expense, therefore it can be deducted from revenue. So profits are lower, and so are the taxes on their profits, which doesn't fully make sense. If they're giving people shares, the article doesn't fully make sense here, I don't think, because if they're giving people money through shares, which is classed as their it's worded funny. So basically it'll come out of their costs, and expenses can be deducted from revenue as a cost. My bad, it's melted. So profits are lower, and so are the taxes they're paid on it. So what they're doing is increase costs through giving out shares rather than giving out through wages. So what that means is, if you earn shares that are less than the value of £3,600, you don't pay tax on them. So for example, you could be earning 25k and then they give you £3,000 worth of shares, so you don't pay tax on the £3,000 worth of shares, you only pay tax on the 25k that you've earned. So that way, the employee gets away with a bit of a tax. They don't have to pay tax on the £3,000 that they've got. And the fact that Amazon are on the up means that the value of the shares goes up constantly. So what that means is, the price of those shares could double or triple. So instead of getting £3,000 worth of shares, they could be getting 6 or 9 if they sell them off in the future, and that's tax free. Once they get it from Amazon, once they sell it off, they'll be under capital gains tax, I think. So anyways, so the employees are winner because they get a couple of grand where they don't have to pay tax. Amazon are a winner because they've reduced the amounts of profits they've made, therefore they reduce their tax bill, and that means that they pay less in tax than they would have done if they didn't give employees shares. So basically what they're doing is they're just rewarding their employees so that they don't have to pay tax, as much tax as they would have done, which is a clever bit of accounting, to be honest, because why should it go to the taxpayer when it can go back to your employees? Whatever, read into that what you will. So is this illegal? No. This is allowed in the UK. So the more valuable Amazon become, the more they can do this. So they can give employees lower amounts of shares and they'll be worth more in future, because Amazon's always going to be on the up, because that's the nature of Amazon. It's a company that's always improving, always offering better service. I mean, Amazon Prime, next day delivery, that's crazy. But anyways, the practice of giving staff shares is widespread. I had a job interview at Greg's a couple of weeks ago. I didn't get the job, but the lady was saying that they offer their employees shares as well, so you can you can put in a couple of quid or whatever and get some shares, and they'll go up in value, and then through what was it, through safe investments you can get some money back. I think it was like a couple of hundred. I can't remember how much you invest, £100, you might double your money or whatever, and thereby you can buy a holiday or whatever you want to do with the money. But the practice is 100% legal. So Amazon, what they've done is they've increased their costs effectively by giving away free shares, and therefore reduced their profits, and thereby reducing their tax bill. And that's the trick Amazon have played here, and I think they'll do that in future, rather than constantly funding their money through companies such as countries such as Northern Ireland and other low tax havens, what they'll do is they'll increase their costs through staff costs, and thereby they'll save some money off their tax bill, and they'll reward some employees at least. So it's not 100% bad, I guess. It's not the worst form of tax evasion, but it's not great considering that smaller companies have to pay their fair share tax. So I don't see why Amazon should be allowed to get away with this sort of stuff. And I remember reading a story about a couple of months ago. I can't remember fully what the story said, but they were trying to get rid of stuff like giving employees shares, and some companies even bought them holidays and gym passes and whatever to that will reduce the company's tax bill, and it also reduce the employees' tax bill as well. It's a pretty smart way of doing it. However, it's not great for the the small company that pays its fair share of tax, or the average person whose his employees aren't going to use these methods. So I think eventually the government will have to crack down on it, or more and more people will start using these sort of methods, and then the tax bill, companies will pay less and less tax, to the point where the government's going to be fucked and they'll have to increase tax somewhere else. Because if companies follow suit with what Amazon are doing, the big companies like HMV aren't a big company. They're doing alright actually. I could have mentioned Blockbusters next, but they're not a big company either, are they? Tesco's, Greg's, if they start doing it more, Argos, all these sorts of companies, they start giving employees shares instead of wages, then the employee pays less tax, but also the company will pay less tax as well, thereby reducing the tax bill and reducing the overall amount the government makes. Because if more people start doing this, the government will feel it, and so will other taxpayers as well. Services won't be as good as they usually are because the government won't have enough money. So I think something will have to be done about these sort of tax evasion loopholes. So hopefully someone does something about it. But the way I see it now, this is 100% legal. It seems fairly legit anyway. So tell me what you guys think about this one. But I honestly don't think, especially a conservative government, even Labour governments haven't really done anything about this. So there's no point trying to score party points here. But honestly, I think something needs to be done about this. But anyways, I'll see you guys in the next video.